All right, welcome back to Simply On Chain. Today, I have a new metric to introduce to y'all that'll help you identify exactly when you should start to take some profits during this bull run. As a preview, let's take a look at the types of returns that you would have gotten if you had purchased in these red sections over here and then sold during the blue sections over here. In this first bull run, you would have been purchasing at about $3, and then you would have sold at about $1,000, depending on which peak you sold at. If it were the latter, you would have made a 330 multiple on your investment. In this second bull run over here, you would have been purchasing at around 170, and then when you sold in the blue area, you would have sold at around 17,000. That would have been a 100x multiple on your investment. In this third bull run, you would have been buying at around 3.5K. If you sold in this blue section at around 60K, that would have been roughly a 16x multiple on your initial investment. And finally, in this most recent bull run, if you bought during this red area over here, you would have been buying at around 15 to 16K. And I think the current price right now is around 86, 87. Now let's dive into the agenda for the day. We will first explain what this metric is and why it works. Then we will backtest by taking a look at a chart and seeing its effectiveness. Finally, we will go over where we are now and discuss where we are headed. This metric is called the long-term holder net unrealized profit or loss, also known as long-term holder NUPL. This is a risk metric because it calculates how much long-term holders, aka smart money, are in profit. The higher this number is, the more likely it is that whales or smart money will sell, introducing more supply onto the market, which ultimately causes the bear market. This is the long-term holder NUPL formula. You take the market cap minus the realized cap divided by the market cap. Realized cap is the price of a coin where it last moved, and the market cap is the current price of all the coins in circulation. So market cap minus realized cap equals to unrealized profits. All right, so what we have here is the NUPL. The NUPL is the line that is in a rainbow color, and then the white line that we have next to it that goes along with it is the Bitcoin price. The area that I want y'all to focus in on is this top section in blue right here. This area is represented by euphoria or greed, and you can see it on the legend displayed right here. Historically, every single bull run peak had a long-term holder NUPL of greater than 0.9. Let's dive back into the chart and check it out. In 2021, it hit 0.91. In 2017, at the peak, it hit 0.96. In 2013, it hit 0.96 as well for the second peak. And then it also hit 0.96 for the first peak. Now, you may be thinking, is this really that effective if it flashed twice during the same bull run? I would actually say yes, because after the first time it flashed, it would have protected you from a 56% decrease from 160 to about 70 before it went on to rip higher. So where are we now? Let me zoom in a little bit for you. Right now, NUPL is at 0.69, which means we have a lot of room to run before we hit the bull run price peak. Although this method has been very accurate in the past, it might make sense to combine this metric with some of the other ones that I have discussed in my previous videos in order to get an even better idea of when it might be a good time to sell. And that's going to be it for today's video. As always, if you are interested in viewing these charts for yourselves, I have an affiliate link down in the description below. See you next time.